Hey guys, what's going on? In this video, very detailed explanation of a 10x trade that has a 99% probability of happening on January 30th, 2024. So very slowly, I'm going to break it down because I had a lot of questions from some of the students that I've already explained this trade to. So I thought like, hey, I might as well just record this video breaking down how do you actually get this extra edge that you really need when it comes to trading. Because guys, is everyone going to trade Microsoft earnings tomorrow? I'm recording this on January 29th. Yes, tomorrow, come January 30th, everyone is going to be doing something with Microsoft. Well, everyone's going to be doing something with Google. Okay, so there's two stocks that the whole trading world is paying close attention to. Now, one of the easiest trades is going to be Skyworks, okay, but a separate video on this. In this video, I'm actually going to break down, well, how would you trade Microsoft in Google earnings by actually not trading Microsoft in Google earnings directly? Because the truth is, it doesn't matter if Microsoft, let's say tomorrow, come January 30th, 2024, Microsoft, let's say it trades after hours at 4:13, and let's say they pump it up more tomorrow and it trades at 4:20. Well, I'm going to show you a strategy that you can win with a 99% probability regardless of whether Microsoft goes up or down tomorrow. Okay, and it has to do with a very thorough explanation, which I'm going to show you guys exactly right now, specifically how would you trade it. But first, I want you to turn on your brain right now because I'm going to ask you some questions about how you would trade it. So this is a good little study session for you to understand how do you get an actual competitive edge. Because this is what really separates 13 Market Moves and a bunch of other traders out there. Most of the fucking traders, they're just going to trade Microsoft. And what are they going to do? Well, do a fucking spread, sell some puts, sell some calls, do fucking this, do fucking that. None of them are going to show you the way we are actually trading Microsoft and Google earnings tomorrow on the 30th. I guarantee you there's not another channel in the fucking world that's got the edge on this trade the way we do it here at 13 Market Moves. So pay very close attention. Take some fucking notes, damn it, if you're trying to go to millions in the next 30 days trading short-term options expiration. And guys, if you're not sure how to do it, just go to 13mmtv.com or 13marketmoves.com and schedule a coaching session. It's absolutely free. Do a coaching session with a 13 Market Moves coach. Now, pay very close attention. Slide number 1. What the fuck is that? Well, for those of you that may not know, Apple represents almost 8% of S&P 500, okay? So when we're talking about S&P 500, SPX, or something that's often traded utilizing SPY, we're talking about Apple representing 7%, 8% of the weight of the S&P. Now, what's important going into tomorrow and Thursday, guys, this video right here, you can utilize it for Tuesday trading and Thursday trading. And if I was to say, well, one of the titles for this video could have been Go Long Tuesday and Short Thursday. And probably a separate video to follow up on that in the next 48 hours. So don't miss that one. But right now, I just want you to focus and understand how would you actually trade this. So pay close attention. Microsoft, 6.5%, 7%. Now, Apple announces earnings when? Thursday. Microsoft when? Tomorrow, Tuesday. Okay, who else announced an earnings tomorrow? Alphabet. Okay, Alphabet's got two classes of shares. Okay, so got Alphabet and Alphabet. Now that represents 2%, that represents almost 2%, that represents almost 8%. So if we line these up together, we're at about 11.5%, 12%. So let's just round it up. Tomorrow's trade represented by Tuesday is about 12% of the index. 12% of S&P 500 will be reporting earnings between 4 p.m. and 4:15 p.m. Very important. Understand this time frame. Again, 12% of S&P 500 will be reporting earnings tomorrow between 4 p.m. and 4:15 p.m. Eastern Standard Time. Now, most of you are going to say, Leo, but hey, I'm looking at Thursday. Thursday's my day to trade, which, guys, clearly you would be thinking that because you probably gotten that idea from us. Well, even if you just summarize some of the trades, guys, Amazon represents 3% of S&P. Okay, Nvidia is not reporting earnings this week. Tesla already reported, and it was total shit. You've got Meta, which is reporting. That was one of our favorite shorts for the week, by the way, guys. So that's about 2%. So you got 2 and 2. I'm just rounding these figures up in a nice way. Simple and easy, guys. And we've got Apple, which is 7-8%. So round this up. Round this up, guys. What you're getting is 2 and 2 and 2 and 8, guys, about 12%. Okay. So companies are reporting earnings on tomorrow, and companies are reporting earnings Thursday. Represent about the same percentage. Well, there's a difference, right? Because there's only 2 companies reporting earnings tomorrow, which is going to be Microsoft and Alphabet. Okay, 2 different classes of shares, and the companies are going to be reporting earnings on a Thursday. Represent the same percentage of S&P. The difference is there's 2 companies reporting earnings tomorrow and 3 companies reporting earnings on Thursday. That's it. That's the only fucking difference. Okay, so stay with me. Okay, do you remember Boeing was on our top 10 short list for 2024? When Boeing drops 10%, what happens to the index, the Dow? Now, the reason we'd be looking at Dow, because this is just an example, guys, okay? Boeing's got nothing to do. It's reporting earnings on Thursday. It's got nothing to do with this trade, okay? Just understand this. This right here, Boeing, when it drops 10%, Dow drops. It's only one fucking stock. Just get this fucking point across. It's one stock that drops Dow by a couple of 100 points, okay? Boeing does not even fucking represent 12% of Dow Jones Industrial. There's 30 stocks, okay? Boeing does not amount to 10% of Dow Jones, and yet Dow Jones goes by a few 100 points lower. Tomorrow we have Microsoft and Alphabet that announcing earnings. I'm going to voice my opinion of where I think they're going to do, but I'm also going to share with you right now a 99% win ratio on trading the earnings tomorrow. And it's not by trading Microsoft, or it's not by trading Alphabet, because any company that goes into the earnings report, their fucking options are going to be overpriced. So you don't go and buy Microsoft puts or Microsoft calls. You don't go buy Alphabet puts or Alphabet calls. You don't go by buying both Microsoft calls and puts at the same time. You don't go by buying Microsoft Alphabet calls and puts at the same time. That shit will not work, okay? And I'm going to explain in a second why. But you would be using some other instruments. And so here's the tricky question of this video. I'm going to bring up a slide to your attention. I'm going to ask you, based on what you know. Now, here's the tricky part, right? Microsoft and Alphabet, they're technology stocks. So would you, okay, if you could not trade, okay, and I'm telling you, you do not want to trade fucking Microsoft or Google ahead of the earnings report, okay, if you did not have those 2 options, okay, would you trade QQQs on either calls or puts? Would you trade actual NASDAQ futures /NQ? Okay, would you trade S&P futures /ES? Would you trade SPY? Which one of those trades would you go with? I'm going to give you 5 fucking seconds. Okay, use your fucking imagination, use your brain, use some fucking analogies I have brought up so far, but it doesn't matter. Just what would you do? If you could not trade Microsoft and if you could not trade Google, okay, if that was not an option, you could buy. Let's say you got some goofy trading broker in Caribbean, and they say, look, you can't trade Microsoft and you cannot trade Google. What would you trade? They're telling you, look, you can trade the Qs, you can trade NASDAQ futures, you can trade S&P 500 futures, you can trade SPY futures. what would you fucking trade? So you'll be shocked. I've asked a lot of traders today that I trade with. Like, some of these guys, they're fucking veterans. They're like, man, Leo, I traded for 30 fucking years. Sure, I would trade the Qs. Okay, fuck you. That's why you don't make fucking 10x, 20x trades. Some of the other guys, well, Leo, man, I've taken your courses. Like, hey, hello, I'm gonna trade the NASDAQ futures, okay? And that's a much better answer. Hell yeah, at least somebody was paying fucking attention to some of this shit I'm showing here on this channel. So that would be an exclamation point. Somebody said, Leo, well, you know, I like trading this futures, man. Ever since I finally set up my fucking account the way you suggested, I'm making some huge progress in my account. I will trade this, okay? And then most of you were like, fuck no, I'm not trading SPY. This is one fucking thing I'm not trading, Leo. Man, I took the SPY puts last week. You told me it was a crash. Nothing fucking happened, man. I'm never taking SPY puts again. Well, you know, not so long ago, I recorded a podcast where I told you I had a trader who, like a couple of years ago, traded with me, and he lost some money, not a ton of money, but like, fuck, that same amount of money that he lost on DWAC back then would have made him $400,000, maybe $600,000 on DWAC calls in the last couple of weeks. But when I gave him the trade and I said DWAC calls, the guy said, fuck no, I'm never trading DWAC again. Okay, so I'm getting some trades who are like, Leo, I'm never fucking trading SPY puts again. No. Okay, so this is also a good sign. This is the fucking time to trade it. Okay, so I'm just giving you the fucking answer. But let me explain you why you would take SPY puts over anything else that you have here on the list. Okay, so it has to do with the time frame of trading. So time frame of trading, you got the Qs. What time do the Qs trade? Okay, well, the Qs trade from 9:30. They're regular fucking trading hours. There's no edge in trading these fuckers here, guys. Okay, 9:30 till 4. Okay, that's like regular market hours. Okay, that is the same shit. Well, I'm trying to show you guys here on this channel, I'm trying to give you an edge that nobody else is going to show you because it's highly risky. Okay, but if you understand the catalyst and if you're trying to trade it and if you do a good job on execution, you will outperform anybody in this fucking trading world. Okay, so you don't want to trade this. Even though it seems like, well, Leo, Microsoft, that's a technology stock. Google, that's a technology stock. I'm going to trade the Qs. Okay, you trade the Qs, you're fucked. Okay, you can catch maybe a 2x trade. That is not what you fucking come to 13 market moves. Okay, so listen carefully. So those of you that said, okay, I'm going to trade NASDAQ futures. Ooh, nice. I like that. Now you're talking about something. With the exception of that Microsoft earnings are right after 4 p.m., okay, which means that you wouldn't be able to capture the big move. The big move tomorrow is going to be between 4 p.m. and 4:15 p.m. Okay, this is very important. Okay, so when we're talking about what time frame do you trade, guys, we're not talking about the time frame of the expiration. Okay, I'm talking about a 15-minute, okay, which you would want to be out of the trade by 4:14 p.m. Okay, you wouldn't be able to capture it with NASDAQ futures that expire tomorrow. So the NASDAQ futures, if you're trading these with options, like we do with 13 market moves, they would expire at 4 p.m. And most of the time, your broker would want you to close them at 3:45. So you wouldn't even stand the chance of catching the Microsoft and Google move after the earnings report. So for those of you, basically, I should have really explained it a little bit better. But basically, because, in fact, let me just step back for a second. Because these stocks represent such a huge part of major indexes, okay, S&P, SPY, technology, whatever, it's going to cause this index to move a lot after hours. And basically, instead of betting the actual stock, which has a high premium on options, you would actually bet the index because the options on the index are highly underpriced right now. But if you're trading NASDAQ futures, okay, that shit would be not able to catch the move, or you wouldn't be able to catch it in the inexpensive way. And what I mean by an expensive way, it is not a fucking insult. What I mean is You know, any strategy we teach you here at 13 Market Moves, your goal as a trader is to buy shit low and sell high. And I know it sounds stupid. This is not a Warren Buffett way to explain, well, you buy when there's blood on the street. There's no blood on the fucking street right now. There's nothing on the street. There's just 100 fucking bulls running across bears at the speed of 100 miles an hour. That's what's going on. So we're not talking about that. Okay, we're talking about you catching a trade where you're able to buy some options for a lot less than you would be able to buy on the underlying, which in this case is Microsoft and Google, which announced in earnings. Okay, it would take literally, for you to make a 10x trade on Microsoft, it would have to fucking drop $60, $70, basically the way the options are priced. For you to make a 10x, 20x trade on Google, it would take Google to drop, 20 points for you to make that kind of trade. And none of these stocks are going to drop 20 or 30 points. They're also not going to go up by 50 or 20 points. So focus on what I'm trying to explain. NASDAQ futures will expire at 4 p.m. So you would have to buy the next day expiration. And the next day expiration on the NASDAQ futures is going to cost you a lot. Okay? So therefore, when you pay a lot for something, even though you can sell it for somewhat of a higher price, it is not going to put 10x, 20x trade in your pocket. Okay? So basically, for those of you that said, well, S&P futures, great. S&P futures, same shit. They expire at 4 p.m. So you wouldn't be able to use same day expiration to trade S&P 500 futures because they expire at 4 p.m. and your broker's probably going to want you to close them at 3:45 p.m. Eastern. So you wouldn't have a shot at trading Microsoft and Google earnings utilizing S&P 500 futures. You would have to go with next day expiration, which means it's going to elevate your cost. Okay, you don't make money on options by buying them at an elevated cost. Okay, when you trade directional options, you do not make money by buying options at an elevated cost. Okay, you could do so in certain instances, okay, when something has an expansion of momentum and move, okay? But in this case, we're talking about a situation when everything has already moved up exponentially. So we're not talking about this type of criteria, okay? So we're simply talking that you wouldn't be able to trade this move on Microsoft and Google utilizing S&P 500 futures because they expired for, and most of the brokers will want you to close your position at 3:45. So this is your holy grail of trading. Earnings utilizing SPY options. Nobody ever fucking does it because this is an edge that nobody fucking understands. And nobody understands it because everybody is scared shitless to take an option that expires in 15 minutes. Oh shit. You didn't just say, Leo, you would want me to buy an option that expires in 15 minutes or less? That sounds like pure fucking gambling, Leo. Oh my God. Oh. Shit, I hope my wife don't hear that shit. Yeah, if she does, she would probably want to take this trade, motherfucker. So listen carefully. I'm about to break this down, okay? Your wife probably would wire some extra money to your trading account right now because she understands it. So don't be a dumbass. Listen carefully right now. What is the time frame for trading SPY? Oh shit. 99.9% of you didn't know this. Holy fuck. You can trade SPY from 9:15 in the morning till 4:15. Leo, you can trade SPY after market close? Like, nobody gets this. It is this extra 15 minutes of pure edge, guys. This is the edge. This is the edge nobody talks about, nobody gets it, nobody fucking understands it because everybody thinks it's a fucking gamble. Well, it's not a fucking gamble. Do you know why it's not a gamble? Because the moment when this trade actually works, if you have all the catalysts lined up and you got all the momentum going and you can point to a perfect setup scenario like we've got right now, going on today, January 29th, going into tomorrow, January 30th, when Microsoft and Google are announcing earnings. Guys, this is the 15-minute edge that you need to put together a 10x to 20x trade. Why? Because you get to buy SPY calls. Oh, Leo, did you just say calls? Ooh, I'm scared now. You're buying calls. No, I'm not just buying calls. I am also buying fucking puts. I'm going to walk you through it, okay? It's not complicated. This shit probably looks complicated, all of this, but it's not. So, guys, understand this, okay? The trade is simple, okay? Let me just show you a couple of things here. There's an average move in the market right now. So this was Tesla. Let me just show you a couple of charts to make sense of this. So Tesla goes into the earnings report at 208, 209. The way the options are priced, you can't really make a ton of money unless Tesla drops 10% plus. Okay, so basically what I'm saying, options are slightly overpriced, underpriced, okay? Tesla doesn't do a ton. Now, we post a video 2 hours before Tesla reports earnings. We'll say, look, Tesla is on a top 10 short list. We shorted it here, 263, 264. It's going down. And instead of saying like, well, guys, collect some fucking profits here. Okay, just be safe. No, we tell you this bitch is going to drop more. And sure enough, it drops lower. And when it drops pre-market to like 195, we say, look, what the fuck are these people thinking? This stock is total dog shit. Okay, so it drops to 180. So basically, this move from 209 right here, guys, represents about 10-13% move. Okay, understand why we're talking about these things. Okay, also if we're to look at Netflix, so we've nailed the Tesla trade perfectly. I'm not gonna lie, we got Netflix trade wrong. Okay, yes, we get some fucking trades around here. So Netflix is exactly the opposite of Tesla. Netflix actually goes up 10% on the earnings report. But options were only pricing for Netflix to go up maybe like 7-8%. So what I'm saying is nobody's pricing an outsized move right now, and it makes sense when fucking S&P cannot move maybe like 10-20 points a day for 5 days in a fucking row. Yeah. It makes sense that options are fucking underpriced somewhat, but they're nowhere nearly underpriced. Like some of the options we had today on S&P. I mean, there was a 17x trade on SPY, and it was a 17x trade on S&P 500 futures. My point is, there are moments right now in the market when options are stupid. They're stupidly underpriced. What I'm telling them, the way to trade it is utilizing SPY because it gets you extra 15 minutes. So I hope this shit makes sense. I mean, damn it. Okay, let me fast this forward a little bit. FFIV, okay? Hopefully you can connect the dots. I'm trying to do, but I'm probably going a bit fast for some of you guys. So FFIV, okay, out of all the charts we say, hey, I know we're fucking bearish the market as fuck right now, but guess what? I said buy FFIV. This is FFIV right here. F5 Interactive. It's a cloud stock, okay? It's on my list. It's on my watch list. A cloud stock for years. Put together big fucking trades on the puts, on the calls, on this, and I'm going for the option chain earlier, and I'm like, fuck, we're buying calls in this because I'm looking at the option chain. It's very rarely like there's not like barely any activity on the puts, okay, which is sort of common, okay? So, all right, we don't have any activity on the puts, but we don't also have a whole lot of activity on the calls, and that's when the stock went before earnings, right? So, and then I look at this one strike, which is like $30, way the fuck out of money, and they're going for like 70 cents. And then I look at this 200 strike. So we send out the alert, guys. If you were part of the paying member group, or if you were trading with the coach, you would have gotten this alert to buy FFIV. So for those of you that are like, Leo, you always short in the market. No, it doesn't fucking matter. When shit goes up, you just short it. Okay, well, there's just a self-evident proof of how wrong you guys are about 13 market moves, thinking that we only trade puts, guys. Some of our greatest trades were on the fucking call side, okay? I mean, probably one of the greatest trades we put together was on mRNA just a few years back when the shit goes from 220, gets admitted to S&P 500, shoots to 280, goes to 380, 480, and then all happens within like weeks, okay? That trade was like phenomenal. DWSC recently, I don't have to go back. We were buying calls in that, guys. So we don't always short stuff. We short stuff when it makes fucking sense. And it makes sense to short stuff at the top of the market. But as bearish as we are, we're not going to miss some fucking trades like FFIB. Yes, calls. Look, there's 1,300 calls that were bought going into the earnings report. Yeah, okay, clearly we probably bought more than 30-40% of that, but who gives a shit? I've noticed this trade based at the chart, based at the longer time frame chart. I've studied it, and we send you the fucking alert, and there it is. Tomorrow, those of you that took this fucking trade, you're going to wake up, you're going to be like, holy shit, I'm trading with 13 market moves forever, okay? So, but this also tells us, since this is a part of the cloud, Microsoft, okay, a lot of businesses cloud, Google, a lot of businesses cloud, because there's a high probability both stocks go up tomorrow. Now, as bearish as I am on the major reversal here, okay, do not exclude the fact that first, Microsoft goes the fuck higher. Google goes the fuck higher. So what I want to predict is what I need to do, okay, to nail this 10x trade, okay, because the trade is this, okay, we don't trade QQQs because they're going to be closed during those hours. We don't trade NASDAQ futures because you would have to buy the next day expiration to capture those 15 minutes of trading. We don't trade S&P 500 futures because shit can go up and it can reverse, and you're not going to capture this. They're going to be more costly because you'd have to buy the next day expiration. The only way you can capture those 15 minutes of trading is by utilizing SPY contracts. That's it. This is what you fucking trade, guys, if you want to capture the big move in Microsoft and Google. And SPY is going to be super cheap. Okay, the moment when S&P 500 in the last hour rocketed to the moon, out of the sudden, broke out of the fucking range we've been staying in the last 5 days, okay, this is what happened. It was due to Microsoft breaking above 407. So Microsoft has got a handle in the market in just such a profound way right now. So whatever happens to Microsoft, this is what's going to happen to NASDAQ. This is what's going to happen to S&P. Okay, but the only way to put a 10x plus trade in actually I'd say 14 minutes or less tomorrow is not by trading the Qs. It's not by trading by NASDAQ futures. It's not by trading S&P 500 futures. It is by trading SPY, because you can buy SPY at 4 o'clock before Microsoft and Google earnings report come out. I probably would pull the trigger on those at 3:59, okay? And considering we're actually bullish, guys, we're actually fucking bullish going into tomorrow's report because we think the initial reaction to the earnings report, all we need to do is nail the initial reaction, okay? As a trader, you trade the initial fucking reaction, and you trade, after that, you trade in the opposite of the initial reaction. So most of these, I think Microsoft and Google, they go fucking higher first, and then they do this. They sell the fuck off. So they sell the fuck off. So if you trade in, for example, NASDAQ futures, and they go up, well, by the time you're like, oh yeah, they're both going up, hey, I'm going to fucking cash out tomorrow. By the time you wake up, they're already going to be down. So hypothetically, okay, Microsoft, let's role play. Say Microsoft is trading 412 after hours, 413. Let's say it goes into the earnings report at 420. Now, I have no way of knowing what the actual number is, okay? I'm just using this as an example. And it's got nothing to do with weed or anything like that. I don't even fucking do drugs. You guys know that. I run 5 miles every day. So 420, okay, let's say Microsoft shoots there tomorrow, okay? And so going into the earnings report, since the last earnings report, and for those of you that missed the last earnings report, it was about 100 points lower. Microsoft drops on the last earnings report, and then it does this. It does exactly the opposite of what I think it's going to do this time. So last time, let me get this. So it does this. It does like a drop and a bounce. So I think this time it's going to be a pop and a drop. But again, going back to this time frame of 4 to 4:15, this is what we want to focus. Within that time frame, I think we're going to get this. We're going to get a move higher, okay? Now, what you want to do clearly, if you are utilizing FFIV that we've nailed today, the earnings report based on this cloud stock, okay, if you're projecting, hey, this could be a sign that these big name cloud stocks are also going higher, and FFIV is up for the year. So this makes it a good comparative example into the Microsoft earnings. Makes it a good comparative example into the Google earnings as far as measuring I would say the cloud side of things. And a lot of people are going to be paying attention to the cloud numbers of Microsoft and Google tomorrow. So considering FFIV is a cloud stock and it shoots up from nothing and about out of the money calls on this, and we saw it and we caught it and we informed you on it, and thank God, hallelujah, a lot of you are going to make a lot of money in the FFIV calls tomorrow. Okay, we could use this as an indication that Microsoft and Google, at least the initial reaction is going to be higher. Okay, and this is what you need to trade the 4 to 4:15 time frame interval utilizing SPY calls. Okay, you utilize SPY calls, but most of you are probably going to be wondering, okay, well, SPY calls, Leo, what if Microsoft drops and Google goes up? Or what if Google drops and Microsoft go high? Or what if both of them go down because, hey, something unexpected happens? Guys, it's fucking trading. Anything can fucking happen. So I'm going to give you right now a 99% probability trade on which, if you take it the way I describe it at the time frames I describe it, despite of what you think about buying options that expire in 15 minutes, okay, you will win. There's 99% probability that you will fucking win. Okay, so if you're looking for a 10x trade with a 99% probability of nailing it, understand the summary of this video. Okay, number one, okay, go to 13mmtv.com and call in and make sure you get assisted by a coach here at 13 Market Moves to pull this off. Because most of you guys, the reality is 3:59 tomorrow, most of you will shit in your pants. You're not going to do what I'm about to describe you should be doing here, okay? And if you do, somehow you're going to manage to fuck it up anyway. So, and this is not pessimistic Leo talking. This is realistic Leo talking, because I worked with thousands of traders over thousands of fucking years. And I'm telling you, even though this is a perfect fucking trade, you will fuck it up unless you call us. So, with that said, okay, I'm going to explain the rest of the trade. Come 3:59, what you do is you don't buy FFIV calls or puts. You don't buy Microsoft calls or puts. You don't buy Google calls or puts. You pull up SPY options trade, okay? And considering what I explained, here, okay, that between Microsoft and Alphabet, we got easy 10-12%, okay? I could be off on my numbers a little bit. This numbers, I mean, they're not precise. It could be off, but it could be fucking 14% for all I know, because the reality is these numbers I have here, okay, I'm not sure exactly when they were taken, and they might have been taken when Microsoft was like 360. Well, now Microsoft going into this at like 420 tomorrow, or let's say even it goes at 413 or 415 or 410. Fuck it. This percentage on Microsoft could be way bigger, but let's say it's anywhere between 10 and 14% of SPY basically is going to be impacted by Microsoft and Alphabet A shares and Alphabet C shares, okay? So we're talking about 10 to 14% of SPY being impacted by these two stocks reports. And we're saying there's a higher outcome of these stocks going higher. But you, as a skeptic who says, fuck it, I don't want to take any chances, okay? What I'm saying is you pull up the options trade on SPY. This is not SPY, this is FFIV, but I'm running out of pages to write on here. So what you do is you pull up an option chain on SPY, okay? And you got your calls here, and you got your puts on the other side right here. This is how Normally options change look like yours would look slightly different depending on your broker, but you got puts here, calls here. What you do is something crazy, okay? So right now SPY is trading at like 491. It's probably going to be trading around here tomorrow as well, or maybe let's say it goes up. Whatever that number is, that's at the money, okay? What you want to do is buy puts, because we're expecting, when Microsoft and Google report, we're expecting S&P 500 to move anywhere from 20 points up to 50 points. Okay, so this could be a big move. And what makes it probable is the fact that fucking market doesn't even expect it. So 20 to 50 point move in S&P, if it's trading at 491, doesn't matter, 492, 493, if it trades at 490, what I want you to do is buy puts, and I want you to put an equal amount in each trade. Now, normally, I'm not an advocate for buying calls and puts at the same time. I'm never an advocate for it unless there's just certain conditions, which certain conditions are now. Okay, they are now that we can see on January 29th, 2024, going into tomorrow, January 30th, 2024, that conditions are going to be as such that it doesn't matter what SPY is. Basically, what you want to do, you want to buy options 10, 20, 30 points out of the money on SPY. So we're talking about S&P futures that are 20 to 30 points out of the money. What you want to be buying is, let's go ahead. I got 491 here. So you want to buy 490 puts. Okay, you want to buy 490, 489 puts, okay, on SPY. You want to buy 488 puts on SPY. If it trades at 491. If you want to capture a 10x'er, you probably should go with 489, 488. Those are going to be a lot cheaper, and they're going to produce a much greater outcome if there is indeed an outsized move. And the reason I brought up the Netflix and the earnings of Tesla is because what nobody expected, a 10-13% move in either shares, but it did happen. So considering if we get a 10 to 13% move in Google and Microsoft, in either direction, it doesn't fucking matter, okay? Because let's say you're committing 5K to this trade, and you should. And if you got a way bigger account, if you're trading with like a 500K account, you should put 50 and 50K in each trade. And the liquidity is there to push it. Like one of the questions that I often get asked, well, Leo, why would you trade options that expire in 15 minutes? Well, because options are designed, okay, based on a time frame that you're trying to target. And if I know the catalyst is coming between 4 p.m. and 4:15 p.m., that's the time frame I want to fucking cover. I don't need to be buying an option that expires in a month or 2 months or 5 months. I want to cover the moment at which I believe the trade is going to fucking move. That's why I trade that 15-minute increment. That's why I go 10x in 14 minutes, while the rest of the trading channels are fucking telling you, oh my God, we're up 20%. Hallelujah, subscribe. And those fuckers got 1 million subscribers, 5 million subscribers, and most of them don't even know how to put together a 10x trade. They will tell you that 10x trades are fucking impossible because they don't utilize the fucking edge. And that's why you come to 13 market moves, because you want the edge that nobody else has, because they don't see trades like that. They don't trade. You got to think outside the box when you try to put trades like this together. And it goes to the options price. And buy them low. You cannot buy options low going into the fucking earnings report. It doesn't matter if it's Microsoft or Google. You can't buy them cheap. They will carry fucking premium. And by the time you do the math, you're never going to be able to put a 10x trade unless there is an outsized move. Unless Microsoft drops by more than 50 points, you're not going to be able to put a 10x trade. But SPY can move 20 to 50 points to give you a 10x trade, to possibly a 20x trade. If S&P moves 60 points, you could be looking at a 30x trade in 14 minutes. 14 minutes, guys. This trade will take 14 minutes. Okay, you don't have to sit and wait for it for a fucking year. This trade will take 14 minutes. If you do everything I've showed you in this video, this trade will take 14 minutes. So for those of you like Leo, okay, so you're saying, okay, if tomorrow SPY trades at 491 at 3:59 p.m., okay, you want me to buy, and the reason I'd say buy it at 3:59 p.m. because, well, shit, sometimes Microsoft earnings report comes like right at 4. And so even though you can trade SPY puts all the way to 4:15, like if Microsoft earnings report releases like right at 4 or 4:0001, like a few seconds after 4 p.m. and you're putting your SPY order at the same time and the market's already moving, you're gonna miss it. So put your order at exactly 3:59. Okay, don't wait for it. Shit, okay, so put your order at 3:59. I know how I got to that screen, but put your order at 3:59 p.m. and you want to buy both puts and calls. So there comes your answer. Leo, how does it become a 99% probability? You don't know if Google's going to go up and Microsoft's going to go down. You don't know if both of them's going to go down or up. Okay, yeah, I'm not even trying to calculate that. I'm giving you a 99% probability because I told you, okay, put $5K in this trade. Okay, you put $2,500 in puts in these strikes. You put $2,500 in calls in strikes that are slightly outside of this strike. So if SPY trades at 491 at 3:59 p.m. tomorrow on January 30th, you buy 489 strike puts on SPY, 488 strike puts on SPY, and you also buy same amount that you're putting in puts. You also buy same amount for calls, which would be 492 strike, 493 strike. Now, clearly, you would adjust it by the same. If SPY trades by the time at 3:59 tomorrow on January 30th, let's say SPY's at 393. Let's say we go up 20 more points in the market tomorrow, okay? Let's say that happens. Then you would adjust that. So if we're at 493 instead of 491, then what you would do is you'd buy 492, 491 puts, and you would be buying 494, 495 calls. So basically you would go slightly out of the money, okay, in the expectation of this 20 to 50 point move in either direction. And if you're buying calls and puts, okay, there's 1% probability that you can lose. Oh shit, Leo, now you're talking to me. I knew this shit was too good to be true. I'm trying to follow you here, but damn it. Tell me, where's the fucking catch? Here's the fucking catch, you guys. Okay, you've been following the channel for a long time, okay? So there's instances where shit does not move. So basically, the only way you can lose in this trade, and this is the fucking truth, okay, in case of Tesla, we got 10-13% drop. In case of Netflix, we got 10-13% move in the opposite direction. Doesn't fucking matter, okay? What I'm saying is the only way you would lose if, okay, nothing happens to the downside and nothing happens to the upside. Okay, basically what I'm saying is the only way you could lose if Microsoft does absolutely fucking nothing. If Microsoft doesn't move by more than a few points, okay, but there's going to be an initial interaction to the Microsoft. Why? Because guys, if you look at the chart of Microsoft, it's going nothing but higher. Okay, if you look at the chart of Google, it's just a straight shot. Like, so I don't have the charts here. I'm trying to just expedite post this video, guys, and just, guys, if you are confused about any of these things, okay, I just want you to call us here at 13 Market Moves. This is an easy trade. It's a 99% win probability. Instead of buying overpriced Microsoft options or overpriced Google options, okay, you're using SPY. You're using the advantage. The SPY is not going to expire at 4 p.m. like all other instruments. You will use SPY contracts to catch that extra 15 minutes of trading. You would be getting in at 3:59 p.m. You would be getting it out at 4:14 p.m. This is your trade. This is your edge. This is how you go 10x, 20x on a trade that nobody will ever explain it to you like I just did. And probably I just did a shitty job because some of you still have some fucking questions. And this is why you should probably contact somebody else here at 13 Market Moves who can explain it to you. Jennifer is great at fucking explaining trades. So you should get in touch with Jennifer. If you do not understand the words that are coming out of my mouth, you should ask to speak to someone else here at 13 Market Moves. Because honestly, most of the people don't fucking understand the words that are coming out of my mouth. but don't let that be on the way of you putting colossal trades like you've never ever seen in your life. So this is it, guys. This is the edge that you get with 13 market moves, thinking outside of the box on the trades that nobody else is thinking about. And it goes down, it boils down to you understanding the pricing of options. You want to buy them low, you want to sell them high. SPY contracts will appreciate by a much greater magnitude than Microsoft or Google. This is why this is the fucking trade. This is how you trade Microsoft and Google earnings tomorrow on January 30th, 2024. Again, if you have any doubts, if you have any questions, if you want to make sure you're pulling the trigger at the right fucking moment, if you think you will get chickened out of this perfect trade, if you think you will get fucking scared, I want you guys to face your fears. Okay, trading with 13 market moves is trading fearlessly. The way we trade is fearlessly because we understand all of the shit, okay, that I just explained to you, okay? We study this shit. We look at hundreds of thousands of fucking charts. We look at the behavioral patterns. We look at the 13 market moves. We look at the divergences. We look at the probabilities. We look at everything. And this is the result. This is how you get the edge. So, guys, you can get the edge because it's the fucking edge. It's the little difference that gets you paid. Instead of making 2x, making a 10x. This is how you get it. By understanding this. By taking action on this. So I invite you to take action and take your account to 1 million plus. I don't give a fuck where your account is at now. It could be at 500, it could be at 50,000, it could be at 150,000, but your account might have been 150,000 for the last 10 years. Because what are you doing? You're trading spreads. Oh, Leo, well, this is a trade you explained. I'm going to buy some call spreads. I'm going to buy some put spreads. And damn right, you're not going to make shit. And you're going to be sitting there wondering, well, Leo, I didn't make a 10x trade. Well, I didn't tell you to buy no fucking spreads in this trade. I didn't tell you to buy no butterflies, which is almost the same strategy you just explained. And I explained that for a reason that you would want to buy calls and puts separately on the shit, guys. Because the reaction could go multiple ways within that 15 minutes and you can profit on both sides. Yes, that is the secret. If you stay this long enough in the video, that is the secret. And that is the reason why you should give us a call here at 13 Market Moves. Because technically, there is a possibility you can go 40x on this trade. If you capture both sides of the equation, the initial reaction could happen so lightning fast, you can cash out of SPY calls and you can go into SPY puts and cash out that leg and you're done. At 40x within 40 minutes, do you have what it takes? If you think you do, okay, don't attempt the shit on your own. You call us now. All right, we don't sleep here at 13 Market Moves. Okay, we are located all over the fucking world. The market doesn't sleep, and we don't sleep here at 13 Market Moves. And if you trade with us, there's a greater probability that you will beat the market. Let's roll. I'll catch you guys in the next video soon.
Can't you see that